everyone, and welcome to this webinar today. I'm glad everybody took an hour out of their day to join me. I will try to give you as much value and information here in this hour as we possibly can. So today we're going to be diving in this show of how to get business credit with no personal guarantee. So I still have a lot of people out there that think that you cannot get credit without personally guaranteeing it. So I wanted to go through this today to talk about what guarantees are, what a personal guarantee really is to begin with. Because you hear this thrown around all the time, no PG. What does that even mean? So we're going to dissect what a personal guarantee is. We're going to look at companies that don't have personal guarantees, and we're going to map out the process of exactly how to get credit without a personal guarantee. We're even going to talk about some of the sources out there that will approve you for revolving credit and the roadblocks that you'll run into. Some have time and business requirements, some don't. So we're going to dive into that so you can see where you may get stuck. And you can also get some feedback of where you can actually get unstuck. So let me introduce myself before we get too far along. My name is Ty Crandall. I'm actually Director of Business Services here at CreditSuite. What we do is we help people build business credit and get financing for their business. And we actually help other companies offer business credit and financing as a service. So I think we've helped nearly 10,000 people just over the last few years. So I have a lot of experience in building business credit. And I see firsthand how these credit issuers change their standards so often, and I'm able to actually sit with you today and go through what's really going on as of today in the business credit world and how you can really accomplish getting business credit without a personal guarantee. As in most of my webinars, I'm not selling anything today. This is just going to be an hour-long information, so whether you're finding us on iTunes, on our podcast, whether you're here live during our event, you're not going to be sold anything today. It's just going to be an hour of straight information. If you are at all interested in getting business credit through us, getting financing through us, or offering it as a service, feel free to check us out online, creditsuite.com/business credit. That's creditsuite.com/business credit. And you can get a ton of information about us and what we do there. Other than that, let's go ahead. Let's jump in and get started. We got a lot of stuff to jump into today. So here's the real question, the million-dollar question. Can someone really get business credit without a personal guarantee? Again, you know, I try to do my webinars or seminars or live events or any of my events around questions that people are commonly asking. So I check my email regularly. I'm checking YouTube comments regularly, and I get a ton of feedback out there and a lot of questions. And this is still one of the questions out there is, can you really do this? Is it really possible to get money without personally guaranteeing it for your business? Well, first of all, before we dive too far in, let's talk about what a personal guarantee really is to begin with. Because a lot of people throw around this terminology of no PG or PG or personal guarantee. So what is a personal guarantee? Well, it's an agreement that makes one liable for one's own or a third party's debts or obligation. So a personal guarantee signifies that the lender or the obligee can lay claim to the guarantor's assets in case of the borrower's default. It's equivalent of a signed blank check without a date. The obligee is generally not required to seek repayment first from the obligor's assets before going after the guarantor's assets. So the lender's actions are usually based on whose assets are easier to basically get, and then once signed, a personal guarantee can only be canceled by the obligee. So this is from businessdictionary.com. We're going to look at a few different definitions of personal guarantee. But from Business Dictionary, basically what they're saying is simply this: the guarantee makes you liable. It's as easy as that. When you personally guarantee a business debt, that means you are personally taking on liability. So it basically signifies, as they're saying, that the lender or the credit issuer can lay claim to your assets. So whoever the guarantor is, when you personally guarantee, you become personally liable, which means they can come and take your assets. And as they laid out here, it's really smart and good to know that there's no requirement if you have 2 or 3 guarantors of whose assets they have to go after first. They're typically going to go after whoever has the most money or whoever has liquid money, whoever's money is the easiest to get. So let's take a look at another definition here from Inc. By making a guarantee, you are putting yourself and your assets on the hook. By acting as the loan's cosigner, or in this case what we're calling a guarantor, if your business dissolves, you will be responsible for repayment. Creditors will go after you in the event that your business fails to repay the loan. Now this is tough because most people don't expect their business to fail. But statistically, 90% of businesses do fail. And the truth is, a lot of failures take place because of things outside of the business owner's control. Okay, radical changes in the environment, new competition coming around, new product, new service, new way of doing things. It was interesting because I was talking to my father over the weekend, and we were talking about Apple possibly getting in and producing a car. And he was talking about just how in disbelief he was that they would take the massive expense of getting into car production. And what I said is, it's funny because everybody said exactly the same thing about them getting into the phone business or them getting into the business of having a music player as they did with the iPod. But they did great. They dominated the market when they got in there, and nobody expected it. So you have to think that years ago, anybody that sells cell phones wasn't expecting them to be the biggest competition as they are now. So there's so many things that can happen in a business environment that you can't control, whether it be new competition coming in, whether it being these radical shifts in the economy, or anything can happen. So because of that, you never want to personally be liable for your business debts because, again, the business space is very unpredictable and it's very high risk. Most businesses do fail because of things that they really didn't expect. So let's take a look at one more definition here from Wikipedia. A personal guarantee is a promise made by a specific person, an organization, or an entity to be known as the guarantor and to accept responsibility for the party's debts in the event the debtor fails to pay. The usual and most common purpose of a personal guarantee, and this is very important because I think Wikipedia has hit the nail right on the head here. This is exactly why it applies to us in the business credit world. The usual and most common purposes of a personal guarantee is typically to allow an organization, in this case a business, or a person to obtain credit when they lack a credit history, or they do have one but lack a credit rating sufficient to qualify for credit. And that's one of the biggest things and most important things you need to know about business credit. If you are required to put up a personal guarantee, then it's because the credit issuer feels that you have a lack of credit history or lack of a credit rating. And this is where most people mess up big time building business credit. They're trying to get store credit, cash credit, without having a base credit profile and score established. And I love this definition because it tells you exactly what's going to happen. You're going to be required to have a personal guarantee in almost all cases where you lack a credit history or you lack an actual credit rating. So that being said, in the business world, the personal guarantee really is requested when the business is unestablished and lacks credit history, a credit profile, and a credit score. And this is business credit. Okay, your business has its own credit profile and score. And when your business doesn't have a credit profile and score established, just like if you never got credit linked to your social security number, then you're not going to be able to get money without them looking at your personal credit. But when you have the business credit established, then they don't need to get a personal guarantee or personal credit check because you have the credit history, you have the credit score that they're looking for to qualify for you for the money that you're looking to get. So they're always also sometimes required for larger loan amounts or always requested for loans guaranteed by SBA, conventional bank loans. So again, this is another reason that some people are skeptical about personal guarantees. SBA requires them. So does most conventional banks and most lending standards. Well, most people go to their bank when they need money. And if you're to go to your bank to get business financing, you're probably going to be asked for a personal guarantee because they're dealing with SBA loans. That being said, there are still loans, even collateral-based financing loans, that don't require a personal guarantee. But again, in these type of situations, if you're going to a bank, if you're getting an SBA loan, those are other cases or other situations where you're going to be required to supply a personal guarantee. And it's also required with some other high loan amounts in which no collateral is being pledged. So when there's higher risk to the lending source, where they're lending $100,000 or $200,000, and you don't have collateral, then in a lot of cases you're going to have a personal guarantee. Now there are other cases you don't. There's types of cash flow based financing or revenue based financing out there that you could secure even without having a personal guarantee because you're pledging your future revenue basically as collateral. But any time that you have no collateral being pledged to offset the debt, then that's basically unsecured money. And when you have unsecured money, which means you're not securing it with collateral, you're going to be required to have a personal guarantee unless the credit profile and score of your business is strong enough where you don't need one. So when you complete a loan application and provide your social security number, you're almost always going to supply a personal guarantee and almost always going to pull your personal credit. And you'll also, in most cases, be providing a personal guarantee. I talk to a lot of people that say, oh, yeah, I have business credit. Okay, it's great. What do you mean by that? Well, I have a credit card or a debit card with my business name. That's not really business credit. The question then becomes, that I always ask, is when you got that card, did you leave your social security number off the application? And people usually look at me stunned and say, well, no, of course not. I gave my social security number. Well, then you did personally guarantee that money, even though it's in your business name. And I hate to tell you, but they pulled your personal credit to make that lending decision. Don't take my word for it. Look at your credit report. You'll see the inquiry. So anytime you provide a social security number on the app, they're going to pull your personal credit. In almost all of those cases, you're also going to be supplying a personal guarantee. So although this might be a necessity with some conventional and higher loan amount loans, it's not required for smaller business credit cards. It's just not. Business credit cards do not have this requirement. They're not getting your income docs. They're not asking for collateral to offset the money. They're going to pull your business credit if you give them your EIN number, and if it's good enough, they'll approve you. It's simple as that. But if it's not good enough, then they're going to want a personal guarantee. So you don't have to put the social security number on the application, but if you do, you're almost always personally guaranteeing that money. So with business credit cards, if the business does have established business credit, that credit can be used to secure the credit cards, so no personal guarantee is needed. Remember, we go back to that Wikipedia explanation. Why do you need a guarantee? Well, usually because the credit profile and score isn't yet established. Well, in the business world, when it comes to business credit cards, like a Staples credit card or a Home Depot or BP or Chevron or Amazon or Walmart or any of these stores that issue business credit, or places like Key Bank that issue cash credit, again, they will approve you without the guarantee, but only if you have a deep enough established credit profile to actually be able to turn around and get approved. So it's important to keep in mind that the entity you choose can also make you liable. And I get this question a lot. Ty, if I'm a partnership, if I'm a sole proprietorship, if I'm an LLC, if I'm a corporation, what does that mean? Well, an entity basically that you file for basically two reasons. One is your taxes you pay. It depends on how they tax you. For some of them will tax you personally. So if your company makes $100,000 in profit, they roll that to your personal taxes, and the $100,000 of profit shows in your personal taxes. Or a corporation, it's like a C corporation, pays its own taxes. So there's two main benefits of the entity you choose. One is the taxes that you're going to pay. And your accountant will usually advise you of the entity you choose based on the tax benefits or discounts to you. Okay, I know this. I just had this conversation with my accountant. He said, you really should consider going to an S corporation. I said, look, here's how much money our company's making. I mean, I don't want this kind of profits to roll in to our actual personal taxes. He said, agreed completely. You have to go the other way. Your company's going to have to pay a lot more taxes. As much as 40% of what you guys make will go out in taxes, but those taxes are paid by the company, not rolled over to you personally. So he's advising me based on the best tax benefit. But again, that doesn't have anything to do with liability. When I talk to him about business credit or liability, he doesn't even really know how those things play out. So usually your accountant is going to give you recommendations based on tax benefits, not your actual entity. But for example, a sole proprietorship or partnership means that you as the owner are liable for the business debts, no matter what you do. So you could leave your social off the application, you could get a bunch of business credit, but if you're a sole proprietor or partnership, by default, the entity you've chosen makes you personally liable. While as a corporation and LLC doesn't require you to be personally liable for your actual business debts. So again, it's important to note that you can get business credit with any entity following the steps that we're going to talk about today, but it's very important to know that the entity you choose will make you liable or not liable because of the entity itself. Sole proprietorships, partnerships, you are liable. LLC and corporations, you aren't liable. So let's look at how the big boys do it. Some of the largest private companies in the United States. Dell, Michael Dell is the CEO. Mars Company, Paul Michaels is the actual CEO there. PricewaterhouseCoopers, Greg Brenneman is the actual CEO. Publix, which is down here in Florida, Lakeland, about like 45 minutes away from me, is their corporate office. William Crenshaw, Pilot Flying J, John Compton's the CEO. Does it make sense that these CEOs personally guarantee their business debts? If you're still thinking, is business credit really available without a personal guarantee, then let's look at the extreme cases. These are the biggest privately owned companies in the United States. And I could pick publicly owned companies, but let's just go with privately owned companies. These are their CEOs / owners. Okay, a lot of these people, all these people are shareholders and are also owners, as well as the CEO. So do you think that when Dell needs to get credit, that they go out and Michael Dell actually signs and gives his social security number and personally guarantees it? That's the question you really have to ask to know if it's possible or not. So let's look at Dell. Well, they do about $57 billion in business annually. They have over 83 reported accounts on their business reports with Experian. You can see right there, there's a quick look at their Experian Smart Business. Now, it's important to note that this isn't really all the trades they have, okay? These are only the ones I'm showing you here that report to one address on file for Dell. Actually, when I typed in Dell, Round Rock, Texas, I got about 8 different options here because they have credit linked to a lot of their addresses. So I just picked the first option. There's 83 trades. If I looked at all of their addresses, they definitely have more than 83 trades with Experian. And if you looked at Dun & Bradstreet, you see more trades there that aren't even reported to Experian. This gives you a snapshot of what you're actually going to see on Experian Smart Business data in that one address that Experian has. So they do $57 billion in business. They have over 83 reported accounts on the business reports with Experian. Okay, with $57 billion in revenue, they have an appetite for very high credit limits, exceeding $100 million. Like, Dell doesn't go out to get credit limits of 50 grand, right? We're all on the same page there. Like, Dell doesn't go out to get a credit card or a credit limit account for $100,000. Like, that's worthless to them when they're a $57 billion company. They, Walmart, all these guys, when they go out to get credit, they're getting hundreds of millions of dollars in credit. They're getting $100 million plus. So, again, the question becomes, is this a CEO that would actually personally guarantee? Is the CEO out there signing their name for $100 million debt? Well, if you think that Dell needs that type of money and gets credit, that Michael Dell's personally guaranteeing the financing credit that Dell has. And that's the question. Is the CEO, is this owner really personally guaranteeing this money that Dell is getting? Well, the highest amount he's probably ever financed, Michael Dell, is about $73 million, probably less than that. How do I know that? I don't have his credit report. I'm guessing. But I can tell you that in our lives, our average lives, we don't usually finance anything more expensive than our home, right? The home is the most expensive thing that you're actually going to finance. Okay, I personally, for fun, I fly airplanes. I'm a private pilot. And I can tell you that even these people that have planes, their planes aren't nearly as much money as their home, or their yachts aren't nearly as much money as their home. So it's fair to expect that the highest amount anybody's ever going to have on their credit report is their home. And in this case, it's public record. You can look it up. His house is worth about $73.3 million. Okay, so he probably, his highest trade line is 50, 60, 70 million. He obviously didn't get 100% financing. He put a pretty good chunk of money down. So his credit isn't even strong enough to secure the type of capital that would be needed to get $100 million. And what I'm saying here is quite simply this. Logically, it doesn't make sense. First of all, he doesn't even have credit on his personal report that would allow him to go out and get $100 million plus. He's probably never financed anything anywhere close to that. So it becomes impossible for him to basically get financing for his business and personally guarantee it, because what happens in a company like Dell or any of these companies I've shown you is the company is just way outgrowing the size of the individual owner. Okay, and this is actually typical of all large businesses and many small businesses. The company, the business, quickly outgrows the credit of the individual owner. And at some point, the business itself has to stand on its own. It's the only way the system works. Because again, the companies will need well more money than the individual owner will need. So the individual owner's limited credit on their credit report doesn't have high enough limits, doesn't have enough borrowing ability to support the company. At some point, every company that grows and is highly successful outgrows the credit of the actual individual owner. So this is why they build business credit. I mean, this is what business credit is. Business credit is designed as credit for a company knowing that the individual will never have enough borrowing ability to support the business as the business grows. The business just has an appetite for much more credit than an individual will ever need. Okay, so when you look at Dell and 83 trades, when you look at Mars, here's 22 trades they have. Here's 153 trades from Pilot. Here's 171 trades from Publix. So when you look at this, all these companies have hundreds or sometimes less trade lines because their companies have to get the credit instead of the individual. And these trade lines you're seeing are not accounts that were personally guaranteed by the business owner. Okay, the CEO of Publix, even the owner, the actual founding people of Publix, are not personally guaranteeing their business debts when they need money. Why? Because they have 171 trade lines on their business credit report. So when they go in to get credit or money, they pull their business credit, they see 171 trade lines, high credit limit of $50 million, $100 million plus, and their credit qualifies them for money just as your personal credit qualifies you for money when you go into credit car loan. Okay, this is how business credit works. This is why these companies build business credit. Okay, every company builds business credit fundamentally for the exact same reason. And per SBA, credit limits on business credit accounts are 10 to 100 times higher than that of consumer credit. And this is because a business has a much bigger need for credit than an individual does. Loan amounts and credit limits are always higher on business accounts than with consumer accounts because businesses make and spend a lot more money than a consumer will. The bottom line is you can't continue to personally guarantee your business debts. It's not a long-term strategy. It won't work. You will quickly outgrow your business what you're capable of signing for on the personal side. This is why SBA talks about business credit. This is why everybody talks about business credit. This is why every big company in the United States has business credit, and exactly why small companies should also. With business credit, the business itself establishes its own credit profile and score. The profile and score is for the business, which is identified by its EIN number, not the Social Security number of the CEO. And once the profile and score are established, then the business can get credit in its name with no need for the guarantee from the actual business owner. Remember what Wikipedia stated, a personal guarantee is needed only when they, the business, lacks a credit history or lacks a credit rating. But once the business has its own credit, it can then get money using that credit just as every big private or public company does. So business credit with no personal guarantee. Well, getting business credit without a personal guarantee is not only possible, but as I said, it's necessary to grow. This is because businesses way outgrow the credit of the owners, and this often happens very quickly, depending on how fast that business is growing. So even if you do personally guarantee your business now, that's unsustainable long term. Look, almost everybody gets started this way. Like when you start a business, you start using money from family or friends or your savings, and you start using your personal credit cards to do it. Even though it's wrong, this is about how everybody gets started. But it's not sustainable long term. You can't do it. Your business at some point is going to outgrow your credit capability, your credit capacity. And if your business grows fast, it's going to happen very quickly. Meaning that, hey, maybe the highest amount of credit on your credit profile is $100,000 because that's how much you finance for a home. But guess what? Within years, if you have a successful business, your business is probably going to need $200,000. And then what do? You ain't going to go to your bank and sign for $200,000 when the highest you've ever financed is $100,000. You're going to need to have a credit profile that's growing at the same pace your business is, and that's possible with business credit because as SBA said, business credit limits are 10 to 100 times higher with business credit accounts. So you can keep up with your growth using business credit, but you can't keep up with that growth using consumer credit. But here's the secret. Business credit isn't only for these big boys. It's not only for these big private or public companies. Any business can get business credit without a personal guarantee. Doesn't matter how big you are, period. Now, some sources will limit the amount of money you can get or time in business. But again, the key is that it's only possible if the business has established credit profile and score. So any business can build business credit. Even one that just opened its doors today, you can still build business credit. The key is that you can only start getting no personal guarantee credit if you have an established credit profile and score. So now you're starting to get to the conundrum where so many people get stuck. Great. So I can get business credit without a personal guarantee, even as a startup, but I need credit to get credit. Okay. Well, then I'm stuck. Well, then we're going to walk through and dissect this today. But again, the key to start getting the revolving and store credit that you mostly want is that you have to go in with the established credit profile and score to get it. So when companies are approved for business credit, it's typically not due to their size. Okay. When you're filling out an application, whether you're approved or not has nothing to do with your size. And the reason I mention this is because that's a natural thing to think right now. You're like, okay, well, it's obvious what you said that, big companies outgrow their personal credit. They need to get it, and they get all these trade lines because they're big. But you have to keep in mind that mostly computers are approving these applications for credit. Okay, and of course at the level these companies are, individuals are involved approving it too. But they're not approving it based on your size. They're not running to Dun & Bradstreet, seeing how many employees you have, and trying to figure it out. As a matter of fact, most applications don't even ask you how many employees you have because it's not size that they're trying to gauge. Instead, credit issuers and lenders have a set criteria that has to be met for you to actually get approved. This approval isn't based on company size, but instead it's based on the company being established. And that's what they're looking for. They don't want to give business credit to what they deem to be unestablished or novice companies for obvious reasons. If you look at business failure statistics, it's very evident that the longer you stay in business, the less of a risk of going out of business you have, period. It's just the way that it is. The biggest risk of going out of business happens within the first year to 2 years. Okay, and you've heard it before, right? The majority of businesses fail within the first couple years of business. Well, that's the biggest, most versatile time that a company actually has. And the longer they're in business, the less of a risk they have statistically of actually failing. So they're looking for established businesses, and it's not just based on time frame. They're looking at many different factors to establish whether you're an established business or not. Okay, look at Facebook. Facebook has been around for less than 10 years, I think. They've been around less than 10 years, and they're massive and worth a tremendous amount of money. So it's not just based on time of business. It's not just based on size. Instead, they have the set criteria that they're actually looking for. And I call this a credibility test. Okay, and I try to mention this in many of my actual webinars or my actual shows because this is where people mess up. People run in and start applying for money when they don't even meet the lending requirements. As a matter of fact, I just defined why everybody fails building business credit, because they try to apply when they don't meet the credit issuer's requirements. It's that simple. So if you want to get approved, you have to know the requirements and meet those requirements before you even think of applying, because they're going to run you through this credibility test. So let's talk about this credibility test. You have to have a physical address or virtual address, period. If you're using a home address on the application, a P.O. box, a UPS box, they have a system. It's the same technology we use for our clients that checks to see if it's a real business address or not. And if it's not, they immediately deem you as unestablished. Now, I'm not telling you that because you work from home, you'll never get business credit. What I am telling you is that your chances of getting business credit diminish greatly if you're using a personal address on the application. And the amount of credit you're going to get is going to diminish greatly because you're using a home address on the application. Now, this doesn't mean you need to go get a physical address. There are things called virtual addresses through companies like Regus, R-E-G-U-S, and Regus can help you get a virtual address where you pay them X amount of dollars per month. You get a physical address you could use on the application that you actually get mail delivered to there. You've got to have a business phone number, preferably a toll-free number. Nowadays, with the age of the internet, if you're not a local company like a pizza company that delivers pizzas only locally, well, then you're doing business nationwide, sometimes worldwide, because we can now with the power of the internet. So most companies need a toll-free number. It's the way that it is. Okay, we have, I don't know how many toll-free numbers for our company. We have to have 20, 30 different toll-free numbers for our company, for all of us that are actually getting phone calls. So you can't have a local number only, because if you're doing business out of state, people are going to need to call you. And a good sign that you're not established is the fact that you don't have an actual toll-free number. And it's very easy through companies like Ring Central to get a toll-free number for real cheap, for like less than $10. But one of the biggest factors that most people don't know about business credit is that a lot of it has to do with your EIN or your 411 number. You have to have your number listed with 411 to actually get approved. If your number isn't listed with 411, you're not going to be able to secure the starter credit you need to get your initial business credit profile and score. You also need a fax number. And nowadays with companies like Ring Central, you can get your phone number to be your fax number also. They just send you like an e-fax that goes to your email address. So you don't even need a separate number or an actual fax machine. You just need to have a fax number, because it's going to be asked on the application. And if you don't even have a fax number, you're going to have a hard time getting approved because it looks like you're not established. You should have a professional email address and website. Okay, this is one thing. If anybody's manually looking at your application, they're going to check out your website to make sure that you're actually legitimate. We had one client that got denied financing at the very last stage because they went to his website and his website said he was going out of business sale. Well, probably you're not going to get a loan if you're going out of business. It wasn't actually his branch. It was another branch, and we got it straightened out and got him funded. But it was perfect indication that they look at your website to make sometimes the final decision. So if you don't have a website or a website that looks professional, because again, I've seen some pretty shoddy websites out there, well then again, it's a sign that you're not really established. And it's so easy nowadays. You can go to a place like monstertemplate.com. You can pay $60 or $70 for a very professional website template. Some are outdated, some aren't. You could pay somebody from like a place like Odesk or elance.com to put up your website. For $200 or less, you could get up a really professional looking website versus trying to build your own, which I see people build their own, and sometimes they know what they're doing and sometimes they don't. Okay, and they don't look that professional. You need to have a professional website. You need to have a professional email address. Okay, you can always be skeptical of anybody in business that has a Gmail address or an AOL address because, come on, it's so easy. I can go to GoDaddy.com right now. I can pick a domain and get a free email for $12. So there's no reason somebody shouldn't have a professional email address and domain. My email is ty@CreditSuite.com. Our website is CreditSuite.com. So you can go out very cheap and get a domain that coincides with your company name and an email that coincides with your company name that's not a Gmail or AOL. They really look at these type of things to actually determine whether they're going to approve you or not. You got to have proper licenses. Your city, the state, your industry. Okay, you can't go out as a contractor, be an unlicensed contractor, and try to get money. They don't want somebody that's not legitimate. And if you're a contractor required to have a license and don't have one, you're not legitimate. You got to have an EIN. Okay, you have to have an entity set up and a bank account. These are basics. If you're thinking about starting any business, the first thing you do is file for corporation, file for your LLC, set up your partnership, you set up your entity. Once you get your entity set up, you then go and get your EIN number. Once you have your EIN, you get your bank account. These are three of the basic things that any business should do in the very, very, very beginning stages. And if you're just getting started, well, I just told you the first three things you're going to do for your business. You need to get your business entity. Okay, you can easily go to your Secretary of State and type in, Florida Secretary of State business filing. Ours is a website in Florida called sunbiz.org. I go to sunbiz.org. It takes me 5 minutes to set up my entity. It costs me $60. And then I have a business entity. Then I go and get my EIN number. And once I have that, I get my bank account. These are the three steps any business should actually follow. If you try to get money without these three things, you're done. It's definitely not going to happen. There's actually 20 of these credibility factors that we really outline with our clients, but these are the main core ones that you really need to make sure because they're absolutely crucial to have any shot of actually getting approved. So if you meet this criteria, you can then start to get approved for starter vendor accounts. These are accounts that you can get approved for even with no established credit whatsoever, okay? Because remember, we talked about, well, okay, how do I do this? I need credit to get credit. Well, how does that work? Well, it's real simple. It works like this. People fail because they try to go to Staples, Lowe's, Home Depot. They try to go to their bank and get money. And those places won't approve them because they have no credit profile, they have no credit score unless they have a guarantee, right? It's all tying together now. Remember, somebody can't get a guarantee without having an established credit profile and score. So if you went into Lowe's or Staples and tried to get money without having enough established credit, then they're going to require a personal guarantee. That doesn't mean that business credit's not available without a personal guarantee. It simply reverts back to that Wikipedia description that you just don't have enough credit established for them to give you credit. So in order to get credit initially established, you have to come in here and you have to actually get business credit through vendors. And then vendors report, they give you a business credit score and profile with Dun & Bradstreet, Equifax, and Experian. And then by getting approved for this kind of credit, using it and paying the bill on time, you can then establish your business credit profile and score. So it all just comes down to applying for credit in the right order. And I mentioned this in several of my actual shows because this is where people mostly mess up. If I get any kind of correspondence of somebody saying, I'm trying and it's not working, it's because they're messing up here. They're trying to apply for sources without knowing what those sources really require. And those sources require more than they have established credit. Some of them have no established credit and are trying to actually get approved. So many people think that nobody can get credit without a personal guarantee. You now know that that's not feasible or logical. Companies have to get business credit to obtain the capital they need for growth. But the reason this belief or myth exists is because of a few common mistakes that business owners often make that end up with them getting declined when they apply. So let me tell you about these mistakes so you can avoid them before you even get started. The most common mistakes that made when applying for business credit is applying for bid credit just in the wrong order. Stores and lenders will not approve you for no personal guarantee and credit until your business credit's established, period. Look, it's the same way in the consumer world. It is. You can't go into Walmart with no credit established and applied for their credit card and get approved. You'll get denied. It's the way it is. They're going to say, sorry, you don't have enough credit. We pulled this bureau. You're done. But if you went into Walmart with 5 credit cards on your credit report, trade lines, you have a score, you have a profile, you're paying your bills as agreed, Walmart would approve you. Okay? If I go in to get a car loan, well, look at my son. My son, his name is Cash. He's about ready to turn 6 years old in a couple days. So in 12 more years, Cash is going to be old enough to go out and get a car. Well, if I've done nothing to help him build his credit, when he goes in to get a car and he has no credit profile, no score, they're going to tell him he can't get approved. They're going to require a co-signer or a guarantor come on to guarantee the money because his credit's not yet established. But if I help him build his credit before then or get his credit established before he goes to get a car, well, then he can use the credit that he has established to actually qualify and to actually get approved. So again, what it really comes down to is stores and lenders are not going to approve you for no personal guarantee credit until your business credit's established. It's the same thing in the consumer world as it is in the actual business world. So you can't start getting credit there or you'll get denied. Meaning you can't walk into your bank and try to get started. You can't walk into Staples, Lowe's, Home Depot, BP, Chevron, Walmart, Target, Best Buy, any store that's a retail store and get credit. You're going to get denied if you even try that. You've got to start with these vendor accounts. You also can't put your social security number on the application, period, under any condition. If you do this, they will pull your personal credit and you'll be guaranteeing the debt, period. Look, even if you give them your social and you get approved, you're like, hey, that's awesome. I got approved, one way or the other, even if I had to use my social. The problem there is that's when you're personally guaranteeing the money. Remember, you want to leave the social off the app so you can actually get the money without the guarantee. Now, many people think they have business credit because they have credit with their business name. And again, we talked about this earlier. You have a credit card that has your business name on it, so you think you have credit. Well, that's not the case at all unless you got it without the social security number. Okay, if a social security number was supplies to get that card, that's not usually real business credit. It's personal liability is involved. You're personally liable, even if your business name is on the card. And the account might very well report to the personal credit bureaus, not the business credit bureaus. So this is why you just got to leave your social security number off the application when applying. Look, there's more than just personally guaranteeing your money that's at stake here. Okay, it's not just if you default, you're in trouble. The problem is if you get credit for your business and sign for it personally, and that credit reports to the personal reporting agencies, the consumer agencies, well, then you're done. Because as you use that credit, your personal credit scores will go down. Remember, a third of your total personal credit score is based on utilization. So if you use more than 30% of the limit of the credit card, you're hurting your credit score. So if you have a $1,000 Staples credit card you sign for personally and it reports to the consumer reporting agencies, and you use more than $300 on that card, you're tanking your consumer scores. So another reason you want to leave your social off, that guarantees that the credit is going to get reported to the business bureaus, not the consumer, or not reported anywhere at all, but it's not going to be reported to consumer reporting agencies. And that means that you're not going to personally have any kind of adverse effects by actually using that money. Also, keep in mind, many frontline people you speak with who work for credit issuers don't know about business credit. Many people, even at the banks, don't know about business credit. I know that because our senior advisor on our back end used to be the biggest business banker for Wells Fargo in the entire country. And as the biggest banker for Wells Fargo, she never knew what business credit was. They never told her that they pulled business credit. It was never mentioned. Then she started training with underwriters and realized that they always looked at business credit. And she was shocked because every application that came in, business credit was pulled, but yet the front-end bankers that help you won't even know that. They didn't even know that. They weren't even trained that. Well, the same thing happens in stores. We had one client that went into Nordstrom's to get credit, and the frontline person said, well, you can't get credit without your social. That doesn't make sense. She got her manager. The manager called the regional manager. The regional manager called somebody else. The somebody else knew how to do it and walked them through the steps. It took 4 or 5 layers of managers to even get to somebody that knew what was going on. So you're commonly going to talk to people that say, you can't fill out an app without a social. You have to give me your social. No, you don't. If you don't give them a social, they're going to pull your EIN credit. If your EIN credit's established enough, then you're going to get approved. Okay, so they'll often tell you that a social security number is supplied, or it has to be supplied because they don't know any better. And remember, you must ensure your credibility is in check to get approved. So don't even try to get to a point where you start applying without doing that. If it's not, you'll be seen as an unestablished business and get denied anyway. So you want to leave your social off the app no matter what they tell you. The second thing you want to do is you've got to make sure that you've passed that credibility test that we talked about to have this chance of getting approved. Okay, so make sure you get vendor accounts first. Once you know your business is set up credibly, it's time to apply for business credit. Okay, when establishing business credit, there's actually 3 types of credit you can get. Vendor credit, starter accounts that offer net 30 terms. That's what vendor credit is. I just told you right there. It's not revolving credit. It's not like a credit card you could put $100 on and pay $25 a month on it till it's paid off. If you put $100 on a net 30 account, you got 30 days to pay the whole $100 back. That's how vendor credit works. So these are starter accounts, the first stage of building business credit. Then you get to store credit. This is revolving credit cards that are available in most of the retail stores. And then you get cash credit, which is revolving credit cards such as Visa, MasterCard that are issued usually by banks. And, you can get approved. You can use those cards anywhere. So when I talk about store credit, I talk about store credit cards. Like when you go into Target and check out, they say, hey, would you like to apply for our credit card? We'll give you 20% off today. Well, if you get their credit card, you can only use that card like in Target. You can't go to Walmart and use it. If you get a Walmart credit card, you can only use it in Walmart. But if you get a Visa card, you could use it in Target or in Walmart or anybody else you want to. So that's what I commonly refer to as cash credit, and then you have store credit and actual vendor credit. So you must be approved with vendors first to offer these net 30 terms. Then after you use those accounts, pay your bills, the accounts will get reported to business reporting agencies. Just because you get approved means nothing. You have to then pay your bills and get a score, and then you have these accounts report. So let's go through it. You get an account with a company called Uline that sells shipping supplies. You use the credit, you pay the bill. Now Uline reports it to Dun & Bradstreet. Now you have a credit profile established because you have trade lines reporting. You'll get a credit score established. Then with the profile, score, and trade lines, that combination is what really allows you to take the next step in building business credit. So then and only then will you have established business credit profile and score. And once your business credit's established, you can start to get approved for store revolving credit next. So remember, we talked about 3 different kinds of credit. Vendor first, store second, cash third. It's the order you have to go through. You cannot skip this order. You have to get vendor accounts first. Once somebody had said to me, I think it was Best Buy. They said, well, hey, I went to Best Buy. They turned me down. Well, of course they did. You started at a store. I thought that was a vendor. It's a store. Stores are stores. They're the retail stores that you're usually used to walking into, okay? A vendor account is a net 30, so that's the big difference is they're going to offer you net 30 terms. So you should seek out vendors who will approve a business for credit even if none is established yet. There's a lot of, keep in mind, 95% of vendors or trade credit in this country doesn't report to the business agencies. So you have to find credit that reports to the agencies and credit that works for a brand new startup business. Now, there are actually many vendor sources who are well known for this. So here's some of them here. Uline, Quill, Reliable, Lachlan & Associates, just to name a few. I just gave you enough to establish your initial business credit. Now, Uline, sometimes if you have no credit established, will make you order 1 or 2 or 3 times from them before you actually get net 30 account. So you can go in and say, okay, Uline, I want a net 30 account. Now, Uline will say, not so quick, Buster. You've got to get money from us and pay for this order first, and then we'll consider it. So you pay for your first order, you pay for your second order, maybe your third order to actually get approved. Sometimes they'll approve you right away, but if you have no established credit, they're probably going to make you do 1, 2, or 3 orders to actually get approved. Okay, Quill, same way. Reliable, similar. So you don't have to go spend thousands of dollars. People ask me all the time, how expensive is it to build business credit? There's no cost involved. You just have to get credit, use the credit, and pay the bill. So if you bought $50 worth of stuff from these guys, well, then that's usually enough. So you go to Uline, you buy $50, or let's just say Quill. They sell office supplies. Like, who doesn't need office supplies? So next time you need office supplies, you go to Quill, you pay them the $50 for whatever your office supplies came out to be. You apply for credit. They say, nope, sorry. Next time you need office supplies, you go to Quill again. You go to Quill a third time. Usually on the second or third time, they're going to say, okay, you're willing to do business with us. We're willing to give you a credit line. Here's a $500 or $2,500 credit line with us to use in our store. Now you got it. Now you use that credit again and keep using it a few times after that, and they'll keep reporting it to the business reporting agencies. You have trade lines, you have score, you have profile. Okay, Lockwood & Associates, they deal with corporation services. They'll approve you if you have no credit established at all, and they don't make you buy like things for multiple times first. Like if you buy their services, you know, from what we've seen time and time again is our clients are able to get in there and actually get approved with them. You'll have to buy something from them on credit. That's how the whole thing works. But even if you haven't bought multiple orders from them in the past. So to start business credit, you first get approved for accounts with these vendors. Some will require you purchase their products first, like I just went through. Some will have you make 3 orders to pay, which I just went through. But all the sources I listed will approve a brand new business, even if you have no credit. Now, I just gave you a golden ticket because I just told you exactly where to go to get your initial business credit, even if you have none established. So now nothing is standing in your way of getting the credit profile, getting the credit score, and getting the trade lines. And as we talked about, trade lines, profile, and score are the 3 necessities for you to start moving in getting the credit you really want, which is revolving credit. You'll want to ensure you have a total of 5 what are called payment experiences reported before you even think of applying for store credit. Now, this isn't a steadfast rule. As we're about to talk about with revolving credit, some sources have other requirements. Some want 5, some want like 10, some want to see time in business, some don't. But as a general rule, if you have 5 payment experiences, then you can start getting store credit. So what's a payment experience? Well, that's basically a trade line, but it's basically the amount of credit you have reported to the total reporting agency. So let me give you an example. Let's say Quill reports to D&B and Experian. Well, that would count as 2 payment experiences. So when I say 5, you don't have to have 5 accounts. You just have to have 5 total reporting of accounts. So if one account reports to 2 reporting agencies, that could really count as 2 payment experiences. But you need to have at least 5 before you move into store credit. A payment experience, again, is the reporting of an account to a business reporting agency. So Quill, for example, does report to D&B and Experian. That means that one account will count as 2 payment experiences, while Lockwood & Associates only reports to Experian, so that would only count as 1 payment experience. So all vendors don't give out no personal guarantee credit. Many have requirements that must be met before they'll do this, but there are a lot of sources who don't have those kind of requirements, and I gave a lot of them to you. So Lockwood & Associates only requires a purchase, and that you have a 411 number and business bank account. What I'm about to tell you is extremely important, and it's another reason people fail. Every source you apply with has set criteria of what must be met to get approved. Now, I don't often or ever do webinars that outlines all that specific criteria for a very good reason. It changes daily. We have a whole team of people, and one person, that's all they do is just keep up with the changes of all of these actual credit issuers. It changes all the time. Okay, so I'm going to give you an idea right now of what these companies' requirements are, but again, this changes all the time. So if you're listening or watching this on a playback, it still might not be the case today, which is why I don't usually make a lot of this information available, because it does change so much. Quill won't approve you right away unless your D&B profile is established, but they will approve you if you first place a few orders with them. Reliable usually requires you place 2 orders before applying and for a net 30 account unless your D&B profile is already established. Uline will approve you for initial vendor account if you have 2 good trade references and at least 1 good bank reference. So I not only told you the sources to go to get initial credit, I now outlined for you their actual requirements so you'll know you can get approved. And remember, all of these will work for a brand new startup business. So you'll need to know how many payment experiences you have established before trying to apply for store credit, because remember, you need to have 5 payment experiences established to get to revolving store credit. So get and review your business credit reports as you go to watch your credit building in real time. You can get your reports from them directly. You can go to Dun & Bradstreet, Experian, and Equifax directly. I get this question all the time, so we even created a page, creditsuite.com/reports, And right there from that one page, you can actually get all three. So once you have these 5 payment experiences, next you can start to secure revolving store credit cards for your business. Now keep in mind, all applications will ask for your social security number. It's never going to go away. They're always going to ask for it. But you do not need to provide it. And that's the habit that you have to create in yourself, is not providing it. It's always going to be asked for. If you do supply your social, they will pull your personal credit. And if it's bad, you're going to get denied. If it's good, you're going to get approved with a personal guarantee. When you leave the social blank, they pull your business credit. And once they see that you have established business credit, then you'll start to get approved for actual store credit cards. So most major retailers do offer business credit as well as consumer credit. Staples, Office Depot, Home Depot, Lowe's, Target, Walmart, Costco, Sam's Club, Radio Shack, Best Buy, BP, Chevron, Amazon, Shell. I mean, almost every single major retailer out there offers store credit. Now, if you don't have time to write all this down, don't worry about it. I'm going to send you a playback to this because you attended the whole event if you are here live, so you'll actually get those because you can stop this, pause, write these type of things down. But it's just important to know that most major retailers do offer business credit revolving accounts. Now, some sources like Home Depot is often known as they have more stringent requirements to get approved. So they want to see big revenue. It fluctuates. I've seen the requirements at $2 million. I've seen the requirements at $5 million. I've seen the requirements at like in between. And they require 3 years in business for no personal guarantee credit. You can get business credit with them, but you're going to have a personal guarantee unless you make millions as listed on your application. They won't verify that per anything else other than your application, and possibly look at D&B if they have that info, but they do have that requirement. Costco requires 2 years in business. Lowe's requires 3 years for no personal guarantee credit. Okay, Best Buy requires you have established business credit to get approved with no personal guarantee. This is common. A lot of sources are like this. If you've established business credit, you can get it without the personal guarantee. If not, then they're going to request one. But notice a company like Best Buy doesn't have time and business requirements as Home Depot, Costco, and Lowe's all do. Amazon will also require a PG if your credit's unestablished, but if it is established, they won't. So again, these sources, as you build business credit profiles, score trade lines, then Amazon, Best Buy will approve you regardless of your time in business for no PG credit. Most stores will give you no PG credit if you have your business credit established. The key is to have a credit profile and score established, or you won't get approved for these no PG credit at stores or banks. Remember, a personal guarantee is needed when credit isn't established. But once it is, you can get approved with most sources regardless of your size or time in business, except for a few exceptions. Once you have a total of 10 payment experiences reported to the business bureaus, then you can start to get cash credit cards, Visa, MasterCard. Amex is hard. Okay, Amex, again, has time in business and revenue requirements, but Visa, MasterCard don't. You could get Visa, MasterCard when you have the 10 payment experiences. And you should have one of those payment experiences have a $10,000 high limit too. That's what's going to be required. So if you go in to try to get a cash credit, you're probably not going to accomplish that unless you have at least one of those credit limit accounts like Dell that gives you a $10,000 limit. So Dell's a good store that will give you credit and usually gives our clients $10,000 limits. So as you move into the revolving space where you start getting store credit, I would look at Dell. It's a great source to apply with. KeyBank and Home Depot are sources that offer revolving cash credit cards you can use anywhere. Many banks offer these also. Just keep in mind, before you apply, you need to have one credit limit account of $10,000, and you need to have 10 accounts. Okay, so when you follow these steps, your business has an established business credit profile and score. This profile and score can then be used to get your credit, your business name, regardless of your personal credit, and without a personal guarantee. Then you'll want to continue building business credit, applying and getting more credit, using that credit, and getting approved for higher and higher credit limits. People ask me all the time, how long does it take to build business credit? Well, you can get vendor credit immediately today. It'll take you about 90 days to get store credit. It'll take you about 4 to 6 months to get $5,000, $10,000 cash limit credit cards. And then you never want to stop. You want to keep getting more and more and more credit, because the more business credit you get, the higher your limits will go. And we've got clients, and we see clients that buy apartment complexes and buy real estate with their business credit. It takes them a year, 2 years, 3 years, and they start getting to $20,000, $30,000, $40,000, $50,000 limits or higher. So as long as you keep using your credit, keep paying your bills as agreed, then you're going to continue to have access to more and more credit to actually grow your business. So hopefully you got a lot out of this today. We dove into personal guarantees, dissected them, how they work, walked through that it's impossible to not have personal guarantee credit because businesses, again, outgrow the credit capabilities or capacity of their actual owners. And I've actually went through and given you a condensed version of the steps you need to take to build your business credit. Now, again, if you need anything on our end, feel free to reach out. So if you do have questions, feel free to give us a call, 877-600-2487. You can also email info@creditsuite.com, or there's my email, which is ty@creditsuite.com. Or you can check us out online at creditsuite.com/business credit. If you do go to YouTube and type in business credit or just type in my name, Ty Crandall, then what you're going to find is you'll find my channel. And if you subscribe to my channel, you'll see there's a ton of information about how to do what needs to be done. I've got hour-long sessions just on building vendor credit, hour-long sessions on just the actual credibility test, hour-long sections on just getting revolving and store credit. So I dive into all of those a lot more deep. It's just in this one I wanted to give you a general overview of everything that's involved to get no personal guarantee credit. So I appreciate you hanging out with me for this hour. I know how valuable your time is, and hopefully as long as you follow the steps here, you're going to get good results as long as you take action. So don't delay. Go ahead, jump in. I've given you everything you need to start building your business credit right now. And again, on my channel, there's a ton of other resources and information that can help you as you progress through the process. So I want to thank everybody again for taking the time to attend this event today. Thank you very much, and I hope everybody has a great day, and here's to you having a successful business. So thanks, everybody.